Hello options traders, Steve Ganz here, and I wanted to share with you the butterfly trade and why I like the trade. So just to kind of give you some context, this is a butterfly that I had put on. I put this on back on July 19th, so about a week ago. And if we take a look at our markets, let me move my face out of the way here. We take a look at our markets. So I put that on right around in here, and the market is considerably lower. So 55.40, now we're down to 54. So we've given up over 100 points. And while this butterfly is getting pressured a little bit, it's not a lot. I mean, it's $350, but this thing has a max risk in it in the $10,000 range. So that's a pretty significant market move and not giving up a lot in P&L. Of course, this is bouncing all over because this is a larger product. It has wider bid-ask spreads. Now, my game plan on this thing is to go and add to this. We talked about different adjustments and things along those lines that I like to do in this trade. So I'm going to pause here a second. I'm going to model up one of those adjustments, and it's basically going to be adding an additional butterfly into this trade. So why would I add an additional butterfly? Well, I'm adding an additional butterfly because when volatility spikes up like it is right now, and these things give you a better reward to risk ratio to put them on. And I can do so widening my tent and not really adding much in the way of downside risk. And I'm moving that downside risk further down the food chain as well. So I'll pause here a second, and I'll be back with you in just a moment, and we'll take a look at what I've done. Okay, so here I am back. So what I'm doing here is I'm simply adding another butterfly, but this one's going to be a flat fly. And by it being a flat fly, and what I mean by that is there's 50 points between these and 50 points between these. So basically what that does is it adds another tent, it widens out this overall structure, if you will. And let's take a look and see what it does also to my delta. So basically it flattens my delta. If I don't have that second structure on there, we can see that I have 750 in positive delta. I've got 1470 in theta. By adding that in there, I am flattening my delta and I'm greatly improving my theta decay. So again, this is one of the things I like to do when the opportunity presents itself. If I'm a seller, a net seller of options, which is what I am here in this particular case, that's a good thing to do when volatility is high. So I'm going to go ahead and I'm going to just say added fly. And then today's date is 7/24/24, added new fly. And I'm going to save as a new trade. I'll copy this link. I'll share the link in the description down below. And again, one of the goals was for people to see how I go about adjusting the butterfly, because again, I really like the butterfly and how they're relatively easy to deal with and manage once you learn them. Now, something I want you to see here, volatility is up today. What I'm looking at our market and thinking that our market might bounce and stabilize. If it does, volatility drops. The second volatility starts to drop in this trade, profitability comes in quite quickly. So that's kind of what I'm counting on. Not only am I neutralizing the directionality of this trade right now by flattening those deltas, but I'm also increasing my theta decay and giving myself a better chance of profitability if the market stabilizes and volatility starts to decrease a little bit. So hopefully you find this interesting. I know a lot of people want to know more about adjustments, so I wanted to make sure that I shared this here today.